Duolingo is down over 27% after reporting earnings. And today we're going to take a look and see if this is the right time to buy into the company or something we should skip. We're going to go through the fundamentals. We're going to take a look at the story. Why is the stock falling? And then we're going to project some future growth using the help of AI and inputs from analysts. This is going to give us a stock price, which you'll get to make an informed decision on whether you should buy the stock or something that you should skip. Now, let's take a look at the story of what's going on with Duolingo. When we take a look at Twitter, this is usually my best sentiment around any particular company. Number one, you can take a look that its revenue was a beat in the last quarter there that it reported less than a week ago. You could see its active users was a beat. You can see its paid subscribers was a beat, and you can see its ADJ was also a beat. And all these metrics were at an all-time high, which begs the question, if the metrics on the fundamentals were at an all-time high, why is the stock falling? Now, if you take a look at its growth of paid subscribers, that's also been compounding at an alarming rate. You could see in 2020, it had only 1.5 million paid subscribers to today almost having 11 million. Amazing to see such exponential growth happen for a company like Duolingo, especially for a company that sells you a product that's to teach you, which requires complete focus. As you can see, same quarter last year from same quarter this year, it's an exponential growth. 36% beat on active users, 20% beat on monthly users. So it's doing good on terms of continually growing and continuing to rack up revenue, profits, and earnings while it continues to grow. I like seeing that. But this is where you start seeing the issue. You see, the amount of active users on a monthly basis is decreasing, which if you take a look back at a few slides, the number of active daily users is increasing, which gets investors nervous because why aren't those users that are coming in trying the platform converting into regular users at the end of the month? Why are they coming in, trying the platform, and then leaving? So now investors are saying, okay, why is that happening? Because of that fear, you are seeing a deceleration or a sell-off in Duolingo stock. This is what this chart illustrates. So now that we have a story, now that we have a reason why the stock is falling, let's take a look at its fundamentals. Let's see its revenue, profitability, and most importantly, the number of outstanding shares, how they've been trending, and is that a trend that's good or ultimately a bad thing for us? Well, if you take a look at revenue was less than $160 million 5 years ago to today being over 900 million. So 3x in revenue, which equates to an over 40% growth every year for the last 5 years. That's beautiful. And a lot of people that are investors that aren't analysts believe that Duolingo can continue this growth rate for the next 5 years. I happen to disagree a little bit, but it's good to see that the retail community has this type of confidence in it. Now, when we take a look at the number of outstanding shares, they basically haven't contributed too many over the last few years. They've been increasing that only about 2% a year. They had a massive influx at the beginning of the century because they were growing so fast. But ever since they've become a mature company, they have decreased that number to 2%. At one point, they were increasing the number of outstanding shares by 3x, almost 200% every quarter, to now a measly 2, which on average is less than 3% over the last 12 months. I like seeing that. I like seeing this. This gives me confidence that the management knows how to utilize capital and isn't just printing money for useless compensation packages for employees and for useless advertisement that really has no payoff at the end. Something that Salesforce does a lot, paying like Matthew McConaughey an insane amount of money. It's crazy. Check that story out. It's really crazy. Profit margin is 40%, which I must say I'm a bit surprised because I expected this to be 30%. I feel like this is temporary. This is mainly due to some sort of tax exemption stuff. So I feel like that number is gonna come down. You can even see it now. It's usually 13%, 14%. Then all of a sudden it hits 40%. And this is because they got a tax exemption. So It's good. I like it. But I think that is an outlier, not the mean or the average for this company. But I do believe it's going to be higher than the historical average of 13, 14, 15% because they're spending a lot of money on capex. So we got to take that into account as well. Now, let's see what most analysts think will be the revenue for this company over the next 5 years. Mainly, let's first ask ChatGPT and see what it thinks that it can be and what analysts are saying. So most analysts usually only go to 2 years. It's no different for this one as well. Most analysts project that 1.2 billion is expected for 2026. So if we were to keep this trend going, we can expect that most analysts potentially believe a 1.9 billion in revenue by 20. For Gemini, we think for Gemini it's saying almost 2.05 billion. If we ask the same question to Claude, it's saying about 2.6 to 2.8 billion. And DeepSeek believes almost 1.9 billion by 2028. So when I look at that number, to me, that's very possible. Extremely possible. But most analysts, most growth is expecting a deceleration. If Duolingo can continue this pattern, I don't see why it can't hit 40% growth over the next 5 years, especially if it keeps executing at the rate it is doing. But I am going to respect what most analysts say and these LLMs are projecting. So I'm going to give a nice number of $2 billion over the next 5 years and see what happens with that. So when we put in $2 billion over the next 5 years, the number outstanding share, I think that is increasing. I think they're going to dilute the shareholder by another 10%. The only reason why they haven't done it yet is because of negative publicity. Instead, if you go into the fundamentals, they're taking out a lot more debt. So I believe they're going to pay off that debt by diluting the shareholder more. So this number, I believe, is going to be 10. Future PE, it's going to be 30. Profit margin is going to be 30. 30, I'm saying on a conservative basis, I think it can hit 35 or even 40. If it actually can 3x its revenue, it's going to be that. But from today to 5 years from now, it's only a 2x increase. So a 30 makes sense. Might even be lower, but we'll say 30. So, and I already plugged in the numbers into CommonInvestor.net. You must try out this website. It's beautiful. It gives you a number behind your thesis. Now that we have all the numbers plugged in for revenue, number of outstanding shares, PE, marginal profit, and the stock price, and we made our thesis, we're saying that it's gonna hit 2 billion. We've entered the analyst projections of 2 billion, 10% growth in the number of outstanding shares, and 30 PE and 30 marginal profit. We get a stock price of $333, which unfortunately is not a 2x from today's price. For you to get a 2x from today's price, you would have to buy this share of this company at $166.98. Until it reaches that amount, according to analyst projections, these are not mine, this company is not a buy. But what if it can? What if it can continue to CAGR 40%, which I believe it can. I truly do believe it can. I believe at one point it is going to tap out and it's going to lose a lot of that good sentiment evaluation rapidly. That's why I'm not investing in it. But I believe it can continue 40% a year for the next 5 years if it continues to execute and attract users. So if we say 40%, and if you go under the future revenue section, it says compound growth. This is beautiful because it can add 40% for you instead of you having to do all this math. So if we write 40% a year for the next 5 years, keeping every other metric the same, you get a stock price of $865. Now this is on a bull case. Remember, major bull case. That was on a base case according to analyst projection. If I was someone that was looking into this company, to buying this company, I would actually avoid it. The reason being, I like to enter positions that get 2x on a base case, on a sentiment case. Something like Meta that it is right now. The fact that this company doesn't have that, and a lot of the growth is coming from the bull section, I would call this a skip. But I feel like from the fundamental perspective, if you believe in this bull case, go for it. And I don't think that you will buying this stock in the short term. In fact, I think you might get an exponential growth in the next 12 to 13 months. But this is not the type of business I'm usually interested in investing in. For the bull case to work out, I find this to be very interesting that all he has to do is hit 5 billion. That's it. 5 billion in revenue, and this stock can go up to this stock can go past 800. That's my whole thesis on it. If you enjoyed the video, if you liked the video, please like, follow, and subscribe. And check out CommonInvestor.net. It's one of the best sites on the internet to put a number behind your thesis. It's the absolute best.